We've seen the US banks kick off the US fourth quarter earnings season, and it's been a mixed bag in terms of the numbers themselves, but the reaction has been broadly negative. Let's take a look, first of all, at the big one, JP Chase, because this company reported earnings per share at $3.57. We've been looking for something slightly less than that. And indeed, you can see as well, we beat on revenues. But the problem is with JP Morgan, if we look at the share price chart, is that the bank, and this goes to the sector overall, it's now pricing in a mild recession. So it's the outlook that concerns many investors. Let's take a look at the next one, which was Citibank or Citigroup fourth quarter earnings. Earnings per share, $1.16. Now, it didn't meet estimates. So this was going to be a disappointment right the way from the very early release that we got from the company. Revenue coming in better than expected, though, at $18 billion. But interesting enough, the effect of what's happened hasn't been quite as severe as the drop that we've seen in shares or sessions on the IG platform for Morgan. There's been this recovery on from the lows that we've had. We've got a very, very small differential in the candle from where we opened to where we are now there at the moment. Let's take a look as well at Bank of America, beating estimates. So we saw the company, you can see their earnings per share, 85 cents. Estimates have been 79 cents. Revenues coming in slightly better than expected, 24.5 billion. Bank of America has seen its credit losses widen. And this is one of the reasons I think why that stock was down, but not as far as we saw in terms of retracement on the way down from the recent gains that we've seen, as we saw from JP Morgan. Quickly catch up with Wells Fargo. This is by far and away the worst performer. Shares falling as the bank profits were cut in half by higher reserves and settlement costs. But in fact, the earnings per share number actually came through a little bit better than expected. 137, we've been looking for 127. Revenues coming in just a shy touch lower than we saw. But in fact, if you look at the share price chart, this Fibonacci, as you can see, it's come all the way down to the 76.4 retracement on this. And this could well be the low for the day. But it's clear that these banks are looking out at what could be a very difficult year ahead. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.